Hello, everybody. Welcome back to another live stream. So we are actually going to be talking about a few different things. Firstly, we are going to mention the Bitboy crypto, what's going on at the moment, but then also looking into like the bullish and the bearish case from Wall Street itself, and most importantly, then into some of these Bitcoin technicals. But looking at the 4-year cycles and how that might be able to help us predict the bottom. But anyway, AJ, how are you, first and foremost?
Yeah, doing well. We've got some exciting stuff to show you today on the charts as well. We have spotted something on the chart as well, which is bullish. It's looking bullish and sort of lines up with that pi cycle bottom indicator that we've been talking about previously. But then obviously we've got to go through those resistance levels that we need to break in order for these scenarios to play out. And I'm also going to go into a bit more depth in the DXY as well, because there is sort of this higher price target that I am seeing for the DXY, which obviously means potential more downside for crypto. So we'll go through that today. And yeah, if you do enjoy this video, please make sure you smash that like button. It does really help us out.
And subscribe to the channel. Don't forget that. Do not forget that.
Yeah.
So look, I'm just going to start. Let's jump in. Here we go. Have a look. Right, here we go. So as you will know, Bitboy crypto, Benjamin, I believe his name Benjamin, yeah. He is trending on Twitter because of some people are saying that he's trying to sue his way out of bad reputation over being paid up $35,000 to get a spoken review, like a time where he will talk about your project for a full minute. And I think this is what happened with Pamp. Now, someone went ahead and called him some very bad names. They weren't very pleasant to him, were they? It was this guy Satoshi. No, not very pleasant, and he didn't like that. So what did he do? He went and sued the guy. Now he's only being sued for $75,000, which, to be honest, for someone who I know he drives a Lamborghini. I know that for sure. And
he showed his portfolio on the YouTube before, and at that moment in time when he showed it, I know this was maybe a year ago, but it was at $20 million when he showed it. So you can see that $70,000 is not a lot of money for him.
Yeah. No, you're absolutely right, and I think the reason why it's getting so much traction is that, so it says kind of through here. So, with these video purports to offer training advice, the channel has a disclaimer clearly stating that it's not professional advisor, or he is not a professional advisor in business areas involving finance, crypto, taxation, securities, commodities, trading, or the practice of law. Now, that is, fairly true. But I think the issue here, and I don't know if it goes into it exactly, but there's a nice line. I saw it tweeted, actually. I'll retweet it at the end of this stream. But what he says himself is the reason why he is suing this guy Satoshi. I can't find his name here. The reason why he's suing this guy is because there's defamation against Ben's core business. Now, if it's Ben's business that has been affected because now he's not trustworthy as an advisor, then it kind of goes against this whole disclaimer he's got. So this is why I think it's very interesting. It'll be, interesting to see how this kind of, pans out. But let's also not forget that Bitboy Crypto was going to do this massive class action suit to bring down everyone who was affected by Celsius, but then he actually said, "Oh, I'm going to have to cancel that because unfortunately I got caught up. I was an affiliate of them, so I can't now do a class action against them." I do think Bitboy Crypto it's a decent channel. He's done relatively well. Well, he's done really well, and he has provided a lot of value. But he's seeking $75,000, but there's already been a GoFundMe that's got 20K, and a crypto whale, Kobe, has donated $100,000 to Satoshi already. So he's 120 grand clear, and it's a $75,000 fee that he has to pay, which I think is actually not too bad. Criticize someone, get sued, and how much you up? What, 50 grand?
He's probably going to pay more in solicitor fees or whatever they call
Yeah.
it in America, lawyer fees. He's going to pay more than 75 grand, so he's gonna come out in a loss. So I just, I don't see his point behind it. And Bitboy Crypto has been, you know, there's a rumor going around that he would pump a token and to his viewers. He would show people a token on his channel to his viewers and get his viewers to buy it, and then he would completely dump on his viewers as well. And then, there's this whole thing where his viewers would would say it's a pump and dump scheme and stuff like that. And he's bloated it around to a number of other YouTubers. So for me, he's not someone I like to watch because I just don't think his values are there. But yeah,
it is crazy when
he does have some good content, but yeah, it's not someone who I personally look up to.
Yeah, I think it's just that it's just being, no matter how bad your project is, it's that you, as long as you have the cash, you can, have a massive influencer shout out. But let us know down in the comments, what do you think? Obviously on this channel, as a channel, we're never going to discredit another YouTuber. I think he's done great things. But yeah, just there are a lot of rumors, and so you always have to kind of be a little bit skeptical. Do your own due diligence. I think is the main thing, and I would expect you guys to do the same with us. Like if I have a title which says, Bitcoin's going to pump off the back of the Fed, watch it. Tell me that I'm wrong, and I'm happily to, we're happy to say that. So far, the market has been relatively predictable, i.e. it's going down. So I've actually been right most of the time. But that's not going to last forever. So
no, you can never be right 100% of the time. And especially with trading, that's something you've got to take in mind. And that's why risk management is a very, very big part of it as well. So
yeah, it absolutely is. But anyway, wanted to mention that. Let's get back onto Wall Street. So let's take it a little bit more, go down the serious route, and everyone can get on their monopoly. I get my monoglass. Was it monoglass? Monocle. The monopoly guy.
Don't know what you're on about.
Like a single glass. Like if you cut the glass in half and make it round. Monocle and a top hat. Yeah, that's what they're called. But anyway, so back to this. Just looking, because obviously we compare the Nasdaq, or QQQ, which is the ETF that basically tracks the Nasdaq 100. We do see a lot of correlation. There is a bit of a lag at the moment. There was that decoupling event that we saw previously, but at the moment, I do think that we are seeing as you can see from Goldman Sachs, hedge funds are getting back onto betting big in mega cap tech stocks. Now, I think at the moment, all of the stocks have had such a battering that as an investor, you're just kind of looking for a couple different places to invest. Now, usually these types of companies, Amazon, Microsoft, Nvidia, Apple, Tesla, Atlassian, maybe not so much, but these kind of big names, these always do really well. They've pulled back massively, just like Bitcoin, but they have the potential to go extremely far. And so when you're investing in the stock market, you look for something called a price to earnings ratio. This is, at quite a good level for these guys. So I think instead of investing in the more traditional companies like, I don't know, Verizon or AT&T, for example, companies are now probably looking for those little bit more risky assets. I'm not saying that right now everyone's getting in, but I am saying I think the risk appetite is changing a little bit, which could be good for us in the longer term, and like I said, I think it's going to be maybe like month, 2 months, something like this, where we begin to see a bit of, movement. But on the flip side, we do still have, like I said, this fear for the short term. It's very unclear, what's going on. The Fed must tighten policy, which basically means raising rates. It's more expensive to borrow money, to hire people, etc., and all this. So R&D goes down. We can see this. The global stock gauge drops back below 100-day moving average. So we can see this here for the global stock gauge. And obviously everyone's just worried about what's going on. So later on today is the last trading day that the US is going to have before we have this myriad of different bits of news. So GDP growth, this is going to be very, very key, Like AJ, remember when they said, what's it? So 2 quarters of negative GDP growth is a recession, and then it happened, and they said, oh, maybe not.
If you change the definition, it's not a recession.
Oh, exactly. Yeah, they're like, oh, actually, no, that's never been the case. It's like,
Yeah,
you literally said it was for 100 years. Like,
yeah.
shut up. Um, but so if we have a third quarter of GDP, GDP decline because the growth rate, there's
Yeah,
negative growth. So if we have a third quarter, it'd be interesting to see how everyone reacts. But I think the wider picture is that everyone's kind of getting these things priced in. And I'll just finish up, show you this. 4-year cycles, as we see for Bitcoin. Last halving was in May 11th, 2020. So, I mean, maybe like here, around about here. Halving happens. I imagine this is kind of the pump. But usually we have a 4-year cycle, and this was something that was produced by Crypto Twittier. Actually, quite a good page. Actually, recommend you go follow him. But based on crypto's 4-year cycles, the bottom is not in until November 2022. And one good thing is he posted this in May 15. So this whole 12K mark that everyone's been talking about is actually not too crazy.
yeah,
But usually he says, you have the halving, hey, and then you get a bull market, then you get a bear market, and then you kind of get a recovery to all-time high almost. You see this level here, and then kind of see this level here. It's not exact, but then a bull market, and then obviously bear market, etc. So this is what
yeah.
he's saying is going to happen. AJ, on a longer time frame, what are we currently looking at in some of the markets?
Well, just to add on to that as well, quickly, before we look at the charts, I can actually show it in the charts actually as well. Let me bring up my screen then. But looking at this, let me just get rid of the indicators quick so I can sort of show you a bit clearer. But what I'm looking at here is the percentage pullback since all-time from the all-time high to the bottom of a bear market. And to add on to what you said there, 12,000, 13,000, it's not a crazy price prediction because we've only pulled back around 74, 75% from all-time highs. Previous bear markets, we pulled back 84%. Okay, so if we pulled back around 80%, say, 82%, that'll be $12,000. Say 84%, that'll be sat at around just over $10,000. And even 80% would be sat at around $13,000. So, to add on to what you said, a $12,000 Bitcoin, $13,000 Bitcoin is understandable because looking at the previous bear markets, we have pulled back 84%. The one before that, we have pulled back 86%. So it's not something we haven't seen before. So I think it's something we do have to expect. And 84 to 86% pullback is something that's very realistic, and we could see that. And for me, it's nothing. It's not the end of crypto. It's not the end of Bitcoin because previously it hasn't been the end of Bitcoin before. So why would it be the end of Bitcoin now when Bitcoin is probably is stronger than ever? There's more people that have ever known about it at this moment in time than there has happened in the previous bear market. So for me, $12,000 is a realistic target.
Yeah, and it brings us back to that thing that we were mentioning. I can't remember the actual the amount of positions, but the amount, like looking at the volume of positions that was scaling in up until 10K Bitcoin. That's kind of, I remember it was institutional data. So I can't bring it up right now because I didn't expect to talk about it. But it is really crazy. Like there was so clear scaling in at every single $1,000 right the way down to 10K. And then after 10K, it went to zero. Like nobody expects it to go down to 10K. And that's one thing I think, as each year goes on. So as you saw, it was 86 from all-time high to bottom, and then 84 from all-time high to bottom. And now, how much are we at so far, AJ?
So we're at 74 from
74. Yeah. So I think we will see probably a little bit more downside. But as more and more people know about this, I do think, it moving down towards that 15, maybe 12K isn't crazy.
And that's an 82% move down to 12,000.
Yeah.
So maybe each year it's getting less. And that's understandable as well because there are more people in it. There'll be more people buying it at cheaper prices.
Yeah, there you go. But this is very big scale, very big brain,
Yeah.
and
Well, this is what the
let's
institutions are going to be looking at, and they're going
that
to be looking at that 80% pullback, 84, 86% pullback in the previous bear markets. That's what they'll be looking at this bull market, this bear market, and that's where they'll be looking to buy up. But yeah, should we move on and look at some of the
yeah,
indicators?
yeah, let's
Yeah,
do that.
so starting off, we're going to look at the weekly first. There's a bit of stuff to look at on the weekly, but starting off with the 200 MA, the 200 MA has been very well respected previously. So if we have a look at this chart here, we can see that since its creation of the 200 MA, because you do need 200 days for the data to start printing, but we've respected this very, very well. We haven't spent much time below the 200 MA before, until this point here, until 2022. We did get a break below it, and we spent a few weeks below it. Then we broke back above it, but unfortunately, we have broken back below it again. So that's not looking too good. But there is actually some bullish signs from some other moving averages, which actually Ben pointed out to me before we started this live. And what I'm looking at is the 100 MA and the 50 MA, and this sort of lines up with the pi cycle bottom indicator as well, which I'll show you as well. But looking at this, when we see the blue line cross over the red line, we do get an indication of sort of the bottom vicinity. So you can see when we crossed first back on the 27th of April 2015, it did signal sort of that bottom vicinity for Bitcoin at around $215. We got some consolidation before having a pump, and then we crossed again bullishly where the red line went on top of the blue line. And then we saw this massive bull market. Again, we got this in 2019. So the 18th of February, 2019, we got that bearish cross where the red line, the blue line. And then we saw the bottom vicinity. It wasn't the exact bottom, but it was the bottom vicinity at around $3,600 approximately, we'll call it. And then we saw a little pump, but then consolidation before flipping bullish again and getting that huge bull market all the way up to all-time highs at just under $70,000. Now, what we are seeing as of right now is we are about to get that bearish cross. This bearish cross, if we continue this slight price action towards the downside or even consolidation, I reckon that we will get this cross in the next coming days, maybe this week or maybe next week, but I think it will be in the next coming days. We will see this cross because as you can see, it is very close to crossing, and once we do get that cross, then looking at history, it has signaled that bottom vicinity, and normally the bottom was established before they crossed. So this could mean that $17,500 was the bottom. That is very likely as well. And looking at bringing up the pi cycle bottom, we know that that's flipped bearish a few weeks ago, and we look for as well. And when it crosses bearish, it does signal the bottom. But then when it crosses bullish again, then we do see that huge bull market. So these two indicators are very similar. And what I'm looking at is to see whether this 150 MA do cross when the red line crosses below the blue line. The blue line's on top of the red line. Once that happens, then that's just another indicator that we have sort of established that bottom. Now, looking at the shorter time frames, so taking a look at the daily. Now, looking at the daily, we do have that indication that we could come down to 12,000. So there are indicators indicating to me that we are going to go lower, but there are indicators telling me that we have established the bottom as well. So what we've got to look at now is the invalidation levels. Which pattern is going to get invalidated first? And obviously, a break below $17,500 on the 150 MA and the pi cycle bottom indicator. If the price drops below $17,500, then most definitely those indicators are invalid. But for me, looking at this bear flag, this is most likely the one that could potentially be invalid first, because the price target is a lot closer than it is if the other indicators want to get invalidated. Because for the bear flag to be invalidated, we have to break above the approximate $22,500, $600 level, which is this white line here. If we do break above that, that invalidates this bearish flag and means that we can continue the price action towards the upside to the next resistance, which is this 12-hour. But as of right now, we are really, really struggling to get above this resistance level here that you can see on the screen. It's been previous support previously, previous resistance as well. So it is a major, major resistance level. And as you can see, we're finding it very, very hard to get above it. So we've spent a number of days. We spent 4 days in this vicinity, this resistance vicinity, between $21,240 and $21,600 approximately. And we're finding it very, very tough to break above this resistance. But once we do break above this resistance, we can have that opportunity to come up to the $22,500 level and potentially break that, invalidating this bearish flag, which has the target of $12,000. If we do get a rejection from this resistance, then the next level I'm looking at, I've told you this yesterday, is that we are most likely going to come down to 19,000. A break of 19,000 is going to bring us down to $17,500. A break of $17,500, and we're most likely, well, if a break of 19,000 for me would be that confirmation that we are going down to 12,000. But I would be looking at $17,500, $600 as sort of a bit of support. Because previously it has been that previous low. So I'd look at that being support. But what's your opinion, Ben, on this? Because, if we break this resistance, I think there's a possibility we could invalidate this bearish flag. But if we do get a rejection, I think the likelihood of it is we could come down to 19,000, break that, and then down to 12,000, which, we talked about at the start of the video, is a pretty realistic target, because previous bear cycles, an 84 to 86% pullback is something pretty realistic. So I just want to see what your take is on this.
Yeah, I think at the moment, there's an awful lot to consider. Obviously, it's with all the financial markets, but like at the moment, technically, we are we've broken out to the downside of a bear flag. We are seeing this. This could be seen as maybe like a bit of a pullback. Like a retest almost. If we do see a bit of movement, because on the wider time frames, if you just zoom out of here, AJ, you'll see, we're in the third bear flag, basically. So that's something that doesn't give me too much confidence at all. Also, I do see, I've just noticed this from Devon Smith here, that we might see, just pretty much the low of around 17.5K being a bit of resistance, which, I hope so. But I think overall, we just have to consider what's going on, in my mind, in the wider markets, because it's not going to be us investors, or who call us retail traders, who kind of do any major movements. I think that's going to come primarily from the big guys. And at the moment, there's just a little bit too much uncertainty. What with CPI next month, also as you mentioned yesterday, is August supplies. Or I was trying to get July, August, supply, demand. So September is usually a very, very bearish month for Bitcoin. So I personally see us kind of moving to the downside a little bit more. And I think we get caught maybe around 15. Because I think if we break below that level of 17.5, I personally see us getting down there in the near future, maybe ranging for a little bit, but I think we will wick down, in my mind. I think we're going to wick down to that 17.5, maybe a little bit further. But yeah, and also another thing that we have to consider as traders is, if you're a big institution, will you take a 3% yield guaranteed from a 10-year treasury bond, over a super risky asset? Everyone, Bitcoin's super risky. I know, you guys disagree with me, but we're all DJs here. We have to just be self-aware of of our
I said
behavior.
Bitcoin's the answer to all your problems.
Yeah, exactly. That is degen behavior. But it's okay. I believe it. I
Yeah,
love it. I can't get enough.
yeah,
But yeah, just one thing to kind of, like in the wider markets, treasuries are at all time, 10 years are at like 3%, which is really, really high.
yeah,
And then, the general stock market's kind of down. Bitcoin's lagging. Usually it lags behind the traditional markets, and the
yeah.
markets have fallen down and Bitcoin
I'll
kind of
look at
hasn't.
that.
So I'm
Yeah,
expecting that little bit more of a pullback just to kind of catch up, should we say, with the traditional markets.
yeah,
So I see us kind of breaking down out of this technical pattern. You've just seen we have 3 of these on the slightly larger time frames.
yeah,
If you go down to a smaller time frame, we're actually currently in another. It's like bear
yeah,
flagception. We're
yeah.
in a bear flag in a bear flag.
Yeah, exactly. So the levels, that we're looking at right now is just this resistance level. If we get a break above it, good. We can then have that possibility of invalidating the bearish flag. But if we get the rejection, then lows, I think, are going to be the next move for Bitcoin. But also the DXY. The DXY is at 10-year highs at 109.
Yep.
This is another reason why people are staying away from riskier assets, Bitcoin, traditional markets, because what they think in their head is, what's the point of investing in risky assets when the dollar is doing so well? And for me, that is the complete wrong way to look at it. When the dollar's doing well, that's when you want to get out of it. So that's when you want to be investing into the riskier assets. That's what I believe. And
It's
that's what,
that buying the dip mentality, or
yeah,
like, it's yeah, when there's blood on the streets, or buy when there's blood on the streets, even
yeah,
if it's your own. Very famous quote that everyone hears about in finance.
yeah, definitely. But taking a look at this DXY, I just want to talk about it a little bit because there is potential that we could see the DXY come up to 116, maybe $120, which is obviously going to be very, very bad for the traditional and the crypto market as well. And that could be what takes Bitcoin down to that $12,000 level. So what I'm looking at here is this falling channel. I mentioned this a while ago, and I said if we did get the break towards the upside, which we did, we would see a price target of 109. That price target was hit perfectly, and we did see the traditional and the Bitcoin market have that pullback. Now, we have established this new resistance at $109 because we had the test back here, we've had the test here, and we got a rejection, and we are now coming up to test it again. Now my thinking is if we break above it, we are going to see a lot more upside on the DXY. And reason being, if I do just go to the weekly chart, and what we can have a look here is something that I showed you a while back as well. This was a very strong resistance level. This resistance up here and a very strong support level down here. This was a massive range we were trading in since 2016. So we've been in this range since 2016, and we did get a break towards the upside right here. And this break actually, if we take the technical pattern, the technical price target, of this pattern. So sort of from the top area to the bottom area of this range, take it to the breakout point. This could give us an approximate target of, when I looked at it first, it was 116, but approximate target of around 117, $116. Now, this is very bearish for the traditional and the crypto market if we do continue to see this price action come up to $117. Now, zooming out even further, we can see that the highs from sort of 2002 were actually all the way up at 120, and around below that, there isn't much resistance. Now there is a bit of resistance coming in at 112. So if I just zoom into 2001 and 2002, and it goes back to 2000 as well, what I am looking at is, I'll draw this horizontal level in for. This is the 112 level. So previously, this 112 level has been resistance here. It's been resistance here, and it's also been support when we were above it. So that is a level that I am going to be looking at in the future if we were to come up to it. So I would look at that as being a resistance level. But of course, we do have this price target at around $116, $117. If we were to hit that, then the next level I would be looking at is the $120 level, because zooming back as well, we can see that the $120 level has actually been resistance in the past as well. So that's the next level that I would be looking at the DXY coming to. If we did get a break of 112, we come up to the price target of 117, then 120 is most likely going to be that next level. So what I am looking at on the shorter term is, if we do get a break of this white resistance level here, then I am looking at the price coming up to $112. If it breaks $112, the next level I'm looking at is that $120 level. And of course, this is going to be incredibly bearish for the traditional and the crypto market. So we do just have to be aware of that.
Can I just add something in there? Just while we're still on that DXY here, just want to show you this. So what would have to happen in order for us to get to that 112, 120 type of level? So obviously this week, and it might be, might take longer than just what's happening this week, but one of the initial catalysts for us to potentially see this move back up to resistance and beyond is if we see the GDP come in if that comes in higher than expected. So if this is like 0.1, for example, or even positive, basically anything higher than minus 0.8 is going to be very, very good for the US economy, which is going to be good for the dollar, because it means that the recession, we might get that soft landing that Jerome Powell's been lying about for so long. But if we get closer to that 0% level or even go higher, that's going to be very good for the economy. And obviously you want to be investing in a good economy, especially when Europe is going down the toilet right now. And then also, this won't affect kind of too much, but for more of those like very solid Wall Street guys, they will take this into account. And then also Jerome Powell. So, obviously he's going to come out, and I mentioned this in my video before. If you're curious about what this means, what's he talking about? What is this whole like thing that's going on Friday? I made a video about that, so you can go and watch it. It was on earlier today, still on the channel. So go check that out. But if he comes and he says, look, guys, we're going to get everything under control and the US economy will recover in a shorter than expected time, shall we say, without a massive recession, and we still keep unemployment at a level that we previously said we would, and it's not going to run away, or etc., then that could lead to, obviously, a lot of faith in the US dollar and dollar pushing upwards, which means, why are you buying? In the mindset of these guys, it's going to be very bad for Bitcoin and traditional markets, as you just said, AJ. So I just wanted to kind of throw that in terms of what to look out for today and what's going to be causing this level of volatility, later on, as we see 25th and 26th, which is tomorrow and the day after in the markets. So watch out for that.
Yeah, definitely. Mr. New Creation just said, isn't the DXY in oversold territory on the monthly? Looking at that, it's not in oversold territory, it's an overbought, overextended territory. As you can see on the RSI, very, very overextended above that 70 level. Same with Sarcastic RSI above that 80. So this signals that a pullback should be in play. And we're also seeing a bearish divergence as well, because we are seeing price action towards the upside, as you can see there, but momentum towards the downside on the RSI. So you can see that this is lower than this high up here. So that is a textbook bearish divergence. So maybe we could come up a little bit higher to the $112 level and get a rejection there, because as I've showed you previously, that is a resistance level. That's a major resistance level. It's rejected as that. We've been rejected from that $112 level twice, and we've used it as support once as well. So it is going to be major supports. We've respected it very well. So there is going to be major resistance. So we could get a rejection from there and not break above that level. And this bearish divergence could potentially play out. So potentially there is a pullback coming for the DXY. But for me, if we do break above this resistance on the shorter time frame that we are currently in, if my screen will load, there we go. On this 12-hour, sorry, 8-hour chart. If we break above this resistance, then I think $12,000 is that next target. But if we do get a rejection we could get a rejection from this resistance here, that bearish divergence could play out, and we could establish this bottom for Bitcoin, and we're not going to see that $12,000 Bitcoin. But who knows? We just need to wait and see if we can break above these levels. Resistance on here. If we break above this, then I do think we are going to get rejected from this resistance level on the Bitcoin chart here. So just be aware of that. I can't really give you an indication of where the price is going to go. All I can say is if we do break above the resistance, we're going to go up and test the bottom of the bearish flag. But if we get a rejection, we're coming down to 19,000. Looking at traditional markets as well, that's at major support. Looking at the S&P 500, you can see major support right here. So previously it's been resistance, but also major support right here before breaking towards the downside. If we do break this, then the crypto market is also going to see a pullback. But what surprises me a little bit, I think it surprises you a little bit, Ben, as well. I know that we see the crypto market lag behind the traditional market, and we have seen the traditional market pull back over the past 3-4 days, and we haven't really seen that in the crypto market. We've seen the crypto market just consolidate towards the upside, really. So maybe we will get this rejection from this resistance if Bitcoin is continuing to just lag behind, but we'll see what happens, because the traditional market is at this support. So if we can bounce off of this support, come back up to the resistance up here, then I do think Bitcoin is going to break above this resistance level here. But it is just that waiting game. So that's what we've got to wait for.
No, do you know? And I think what it is that a lot of the volume has come out of the market recently, and I think it could be because there are, and I don't want to, I don't want to sound like a perma bear or something like this, but it could be that just genuinely the market, or the general market, when I say the market, not the crypto market, the guys on Wall Street, for example, are just not as excited about Bitcoin anymore. Obviously, we've just like copious amounts of downside. It's only really like the people who believe in crypto that are actually, in it and sticking around and kind of talking about it, etc. But there's not too much volume. We see, obviously last week there was a sell-off from institutions in Bitcoin. People are excited about Ethereum, but for Bitcoin there's just not as much volume or attention. So I think people are like, well, we've got to worry about GDP, we've got to worry about Jerome Powell, we've got to worry about CPI, recession. There's so many different things, and that's just only to do with the US economy. That there's so many question marks there that I think that might be the reason why people are not paying as much attention to Bitcoin, and that's why obviously volume is are crazy low. And also then why there's not as much of a correlation, because I think some of the strategies would have been, right, let's buy risky assets. Okay, so we put risky assets, a bit into Amazon, a bit into Tesla, and then also put maybe a future on Bitcoin. But I think that would have caused correlation, but now not so much.
Yeah, and to add on to that, you talking about volume, we are seeing that decrease in volume, but the price has actually been going up. You can see that we've had this uptrend, but we've seen a massive decrease in volume. That isn't good. When the price is going up and we're seeing a decrease in volume, that is really not good. And that's why we have seen this massive pullback. But we're still not seeing any volume. We're not seeing this price being bought up at all. So that's why I do think the probability of it going down is a lot higher than the probability of it going up. So yeah, as I said, though, we'll just have to wait and see if we can get a break of this resistance on the daily chart, or if we do get a rejection from that resistance. But yeah, seeing a decrease in volume whilst the price is going up is a very bearish thing.
Yeah, and it just means like it means like a smaller and smaller fish can come in and manipulate the price. Because all it takes, if there's only 100 million of volume in the whole in the Bitcoin market, for example, I know there's not but if it's if there is a lot less volume, it takes a lot less to actually cause any kind of difference. So it's more liable to these big drops from relatively small small bits of volume itself. So that's something to kind of keep in mind. But yeah, I think best thing we can do is just continuously make sure you're up to date where as soon as these things happen as well, because
Yeah,
that's when
yeah.
you want to be looking at
Of
them.
course, I'll keep you updated on this resistance level here, because this is the most critical level for Bitcoin right now. Is this $21,400 level approximately? If we do break above it or get a rejection from it, I'll let you know instantly on Twitter. So make sure you do follow us there. I will just take a quick look at Ethereum. Nothing too exciting is happening on Ethereum
Very
at all.
similar, isn't it?
Yeah, it's exactly. It's the whole market's just waiting for Bitcoin, and we're seeing the same thing with the volume decrease in volume, broken towards the downside. It looked like what's this 12 hours? So it looked like yesterday that we did actually want to come back and test this resistance up here, which I think would be quite a healthy thing if Ethereum did that. But I do think if we did come and test the resistance up here, we would get a rejection and continue to see the price coming down, because it's just, for me right now, the bearish scenario is more likely than the bullish scenario. So yeah, we'll have to see if Ethereum comes back up and tests this resistance. If we can break above it, good. If we get a rejection, then obviously we are going to come back down to the $1,350 level, and then potentially down to the $1,000 level, which actually, if we do come down to the $1,000 level, there's a major support along that level. If we did break below that, then I think a lot lower prices will come next. You can see lots and lots of support along this level as well. So that's going to be a critical level if we were to come down to that $1,000 level. But yeah, as I said, nothing really new for Ethereum. We're just sort of waiting on Bitcoin to see if we can break above this resistance or get a rejection. And then, yeah, if we break above it, I think we'll see a lot of volume come in. But if we get a rejection, I think we're also going to see a lot of selling volume coming in as well. So, yeah, that's sort of everything I've got for you on the charts. I'll also keep you updated on this DXY, because this is a very, very important chart right now. If we break above this resistance, 112 is in play, and most likely we'll get rejected on this chart for Bitcoin, and we will pull back. And going back to this chart as well, which is actually a bullish scenario, this chart here, if we do break above those resistances and break that resistance from the bottom of the bear flag, then these scenarios could be in play. But we can only talk about these scenarios if we do break that resistance at the bottom of the bearish flag. So right now I sort of will just hold off on thinking that these scenarios will play out, because we do have a lot of resistance to break before we can really start talking about these bullish scenarios.
There you go. There you go. And also, guys, obviously, I see that Mr. New Creation, you said, I hope Bitcoin comes down and triggers my buy orders at around 19K. And what me and AJ should probably do, we haven't spoken about this, so I hope he agrees, but he's now live streaming, so he has no choice. So we will redo our long-term portfolio. So obviously we have two different portfolios which we trade with. One is more of a dollar cost averaging method into the market. So that's where we place orders. We're happy if they're triggered at 20K, 19, 18, 17, whatever. And so some of you guys will have already seen that. But then also we have our short-term trading. That's the one we did 100% on a link trade just a couple of days ago. So, we do those with the two different ones of only 5,000. The other one's only 500. So, any level that if you guys want to get involved and, if you want to start up, you can have a link down below where you can get up to $4,000 as cashback. You could do that and then obviously follow our trading strategies that we just post live for free. So either take it, or don't. We don't mind.
We do actually have some buy orders still in play. I think we've got a buy order at 17,000, buy order at 16,000.
Down to 50. No, I think it's 16.5, 16, 15.5. Because what was the indicator? Can we check that out?
I'll have a quick look at that, because I haven't actually brought that up for a while.
CVD?
CVDD, yeah.
CVDD.
Let me just bring that up.
Because so I know that's where
I haven't spoken about this one for a while.
I know.
Let me refresh it just to make sure we're up to date. So,
I'll fling it up on the screen. Oh,
There we
Boom.
go. Yeah. So
I might zoom in a little bit.
zoom in.
Yeah, can't see that top right.
Yeah. Right.
Where's the
So
price we're at?
I'll,
Oh
I'll
yeah.
go through the history just very quickly. So CVDD is this pink line here. Previously, it has in 2011 predicted the bottom. In 2015, it predicted the bottom. In 2018, it also predicted the bear market bottom, and the price is currently sat at $15,600, just a little over $15,600, and this is predicting that at this moment in time is predicting that the bottom is going to be sat at around $15,600. It was previously sat at $15,300, and it is a moving average, so it is going to vary a little bit. But it has predicted the bottom of the past 3 bear markets. So there is a high probability that it could predict the bottom of this bear market as well. So it's currently sat at $15,600. So, that could potentially be the bottom of this bear market if it did carry on its 100% success rate. But obviously, we do have these $12,000 targets in play as well. So we do just have to be aware of that. But I have been using this as sort of my bottom indicator. So for me, the bottom is $15,600. And we did have our very last buy order at that level. We've been moving it as this CVDD is moving as well. But yeah, this is sort of my bottom for Bitcoin.
I'll just mention something here, AJ. So again, Mr. New Creation has said the majority are expecting $12,000 to $14,000 Bitcoin. This is why it won't go there, which actually is quite interesting. It's like when you're at the top, when you're at near the top of a bull market, everyone is saying, "Oh, it's going to go 100, it's going to go X, Y, Z." And I was watching a couple of videos on Bitboy crypto, and that came up where we were at 60K, and he was like, "It's going to go to 320."
He had some pretty high targets, didn't he?
Yeah, he did. But and I think where everyone's talking about 12, everyone's going to want to get in. No one is going to want to be last and miss out on buying Bitcoin, probably any price below 17K, to be honest. And so, Devon also has said that's true. Bitcoin seems more likely to base and range around the 17.5 lows now, which actually I kind of get, I do, because I think as soon as we get to 17K or 17 and a half, everyone's going to have buy orders already waiting. If it gets to 16, you best believe everyone's got buy orders, and it goes to 15. I would be 100% happy putting everything in at 15. Okay, maybe not everything in that trading account, whatever. I'm not going to be selling my wife. I wish I had one. Sad story. Not joking. But I would rather have all of my spare cash in at 15 and have it, just wick down to 14, and I might miss 14, but I don't care because I'm in at 15, which is 2.5K lower than what was already a crazy low. No one expected it to go lower than 20, this time around. So I do think that will kind of be the mentality where some people will wait for it to go to 10 or 11 and miss out.
Yeah, definitely. And I just want to add on to what you said as well. When we were at those all-time highs just below 70,000, everyone was talking about going to 100,000 and higher. But back then when I was it was back in early 2021? I can't even remember now. But when we were at the all-time highs back in April, when we were around $65,000, the indicators were telling me that we were oversold. So for me, the all-time high, that was sort of the all-time high vicinity. I didn't think we were going to go to 100K because the indicators were telling me that we were oversold. Looking at the RSI, we were in a very, very overextended period right here. So for me, 100K was very unrealistic. And again, when we were at 70K, we still had a bit of room to grow, but that 100K level, it was still pretty unrealistic. And looking at stochastic RSI up now, but I know that was all the way at the top. So I was preparing to short the market. But what this chart shows us here is that we should be getting ready to sort of long the market, because oversold RSI. So this was back in 2015, January 2015. This is when the RSI dipped below 30, and that signaled the bottom of that bear market, the bottom vicinity of that bear market. Again, in 2018, December 2018, the RSI dipped below 30, only very slightly, but it dipped below 30, and it signaled that bottom vicinity for Bitcoin. Again, we saw a huge pump, and then obviously we had the COVID crash that came very close to bottoming out, well, coming below 30, but we did see the price increase massively as well. And what we have seen is the RSI actually dip below 30. I hope you can see this. I know the numbers are very small, but we have dipped below 30. So it is signaling to me that that bottom vicinity has already been in. So these massive lower price targets is a bit controversial, because I know I do have this price target of $12,000 if we break these support levels. But looking at these indicators, which haven't ever lied to us before, they're telling us that the bottom vicinity has already been established. And these price targets for $12,000, maybe they're a little bit excessive, and maybe those price targets of $12,000, are not going to be hit, like what happened when we were at all-time highs and people were calling for 100K, but we didn't go over 70K. So this could potentially be what we are seeing. But again, it just goes back to that DXY. If we do see the DXY continue to increase, then the traditional market's going to continue to decrease, and also we are going to see crypto decrease. So, it's a very, very it's a very hard situation that we are in at this moment in time, and all we can look at is those resistance levels on this daily chart here. That's all we can look at right now, and this support level here. If we get above it, we can invalidate that bearish target of $12,000, because we can get above this bearish flag. If we come down to 19,000 and we break that, then $12,000 is probably pretty realistic, or even just that $15,600 level is pretty realistic. So all we've got to look at right now is this resistance level here, which is sat at around $21,400 level, and that support at $19,000 level. That's all we got to look at right now, because it's very uncertain. There are a lot of bullish indicators, but there are also a lot of bearish indicators. And I know all over YouTube there will be YouTubers that are bullish, and there are YouTubers that will be bearish. So for me, I don't like to stick to one. I like to keep my options open, and I just like to look at the levels. If we break above this level, I'm bullish. If we break below this level, I'm bearish. We're going to go lower. So that's all I am looking at right now. And I did actually do a really good video. We might have to put it in the description after this live. But I went through this chart that someone made. I don't know if I've got it up. I don't know if I'll be able to find it. I'm trying to think where it was. I'm not going to be able to find it. I don't think I've got it open, but I went through the correlation between Bitcoin, the traditional market, which was the S&P 500, and the DXY. And I showed how we go through these phases. There was a green phase, a yellow phase, and a red phase. So the red phase was the bear market. The yellow phase was the accumulation phase, and the green phase was the bull market. So I'll have to link that below, because that was a really good video, and it gave you a good understanding of what happens to the traditional market and the crypto markets when the DXY does a certain thing, either consolidate, pump, or dump. So I'll have to make sure I add that video in the description so you can watch that, because it will give you a really, really good understanding of where we are currently in the market and what could happen. Right now, we are actually in that yellow phase. I think we are in that accumulation phase. But I will put that link in the description for you. I'll add that link, and make sure you go watch that, because it will give you a really good understanding of what phase we can expect next for Bitcoin.
That's what we like to hear. That is what we like to hear indeed. And we can't really put it, any more clear than that, really. Obviously, guys, we're going to make sure that we keep you up to date. How long is left on this candle, AJ? The one we're currently looking at, it's the daily, right? Is this the daily? It is the daily.
Yes, this is a daily chart. So the resistance is sat between 21,200 and 21,600. So that's a level to watch out for right now.
Yeah. Okay. There you go. And we have 20, what, 10, no, 10 hours, sorry, on the candle. Is that right?
10
Duration.
hours and 50 minutes. Yes.
Yes. Okay. So I think that's going to be one of the big catalysts, isn't it? Once that gets
Yeah.
printed, you know, unless it's printed exactly in the same way, which it looks like, looks like it hasn't moved at all, has it?
Yeah. Over the past 4 days, we've had those
On the
wicks down
candle.
below the resistance, but
Yeah.
we've just been trading really within this resistance level, and this just confirms that this resistance level is a really, really strong resistance level. So yeah, breaking
Mm.
above it or getting a rejection from it, we are going to see. I think we are
Quite a
going to
big
see a
move,
big
I'd say.
move. Yeah.
Yeah. Okay. Good. Well, look. Let us. We will put that link in the description for you first. A link in the description.
Yeah.
Make
I'll
sure you head
put it at
there
the top.
once we posted this because we'll go and do it afterwards.
Yeah.
Um, but yeah, it's follow us on Twitter so that we can kind of keep you up to date. But obviously, we'll be back tomorrow, and tomorrow we will be looking at. Let me just see what time is it. So GDP. Let's go live. We'll go live during the GDP growth rate for the second quarter of in the US. Yeah, basically
Yeah.
GDP second quarter US, 4:30 GST, 8:30 in the morning US time, and let's see how that affects the DXY because that, like we've said today. Also, obviously, watch the video that we're going to put into the link, as I just said, so that you know. Okay, well, if the DXY does this, then Bitcoin's going to do this because this is going to move the DXY. So I want to make sure that we're all live together to go through that. Are you
Yeah.
in, AJ?
Yeah. Yeah. I'm down. Let's do it.
Yeah, Murka.
Yeah. Make sure you smash that like button as well. It does really, really help us out, and we will appreciate it if you do smash that like button.
Yes, yes. I feel like it's not too much to do, is it? A little just cheeky little like.
No, it's not. I
And I
think
want
I've put the link. I think I'm able to do it. So I'll put the link to that video, that DXY video, in the comment section, in the chat, the live chat. So you just copy and
I'll
paste
also
that.
stick it in the description as well.
Yeah, I'll do that as well. But that will take you over to the video. It gives you a really good understanding of what happens to the traditional and Bitcoin price when the DXY does move. So yeah, make sure you give that a watch, and yeah, it will give you a good understanding.
Perfect. Good. Look forward to seeing you guys tomorrow. Have a nice day and
Yeah,
stay safe. Always
yeah.
use protection.
Use protection. Thank you very much for watching, guys. We'll see you in the next live.